Hi there, Dean Heskin, President and CEO of Swiss America Trading. Thank you for tuning into our podcast. I have with me today Chris Agelastos. Chris, you're going to join us yet again for another episode of our podcast entitled The Secret War on Cash, in which we greatly appreciate you being here to do. How are things with you today?
Great, great. Yeah, I look forward to this every week. This is like a nice, peaceful conversation. It's a lot easier than working for a living.
Well, that's it. That's very kind of you to say, and it's very kind of you to be here. And let's get right into it. You've been
Yeah,
busy, I know, because gold has been rocking and rolling and rallying and doing all those positive things.
yeah,
Not something that was unexpected or unforeseen, especially for those of you who've been tuned into this podcast, where, goodness, we're about to get into like the fourth quarter of 2024. And it was really roughly about this time last year, maybe a little bit later, but pretty close anyway, where all the talk was gold was going to hit prices of $3,000 an ounce by the end of this year. And what's interesting at that time, it was, don't have the exact figure in front of me, but somewhere a little below $2,000 an ounce.
yeah.
And now we're looking at, gold hitting these price levels of 2,500 to 2,600 an ounce. So,
Yep.
as the title says, all that glitters, the rally in gold seems unstoppable at this point. And that really is a pretty specific or pointed and accurate statement when you take a look at where things are today and where it appears they're heading. So, Chris, tell us why gold seems to be unstoppable at this point.
Well, I think a big portion of it is certainly inflation. The Fed just did what a lot consider a pretty big rate cut of 0.5%, and we're getting new inflation numbers coming out this next Friday, which people are expecting to be a little bit higher than they should be, and maybe partially in lieu of this Fed rate cut. And none of our country's money printing and spending issues have changed. So, like you mentioned, this time last year, we were talking about a really a minimum. Even the conservative estimates were like $2,300 to $2,500 gold, and you had a lot of people saying $3,000 and above. And lo and behold, we're sitting right at around 2,600 right now, and have been touching that number quite a bit the last few weeks. So I think it's gonna continue to run. We haven't changed anything to slow it down, right? There hasn't been a drastic reduction in inflation. The government, I know this won't surprise you, but they still do not have a budget that they are following, and so printing and spending is in the agenda, regardless of who comes into office this coming year. And so, most people are expecting prices to be 3,000 and higher, going into 2025 here.
Sure, and that it's interesting because and again, as we've been discussing or covering over the last several months, this is just looking at one aspect of what it currently or right now
Mhm.
is driving gold prices. There are other things, and I want to make that point or that distinction because a lot of people say, okay, well, government they're doing these rate cuts, they're going to get the economy back in check, back in order, and understand this is just like one of many spokes in the wheel that
Right.
has been contributing to this rally in gold. And point being, and we don't have time to get into it on this particular podcast, but we will be covering it certainly more in the future, as we have already in the past. But like there is just all of those factors that have been feeding into this price acceleration for gold. Those factors are picking up steam and momentum literally by the day.
Hmm.
And which leads into a good lead in, I think, into our next article, where now they're talking about how metal mania starts soon.
Hmm.
And I was when I first saw this article, I was interested to read it, in so much as that when you look at any marketplace, again, just use this year, gold going from 2,000 an ounce to 2,600. Well, you're talking basically that's a 30% increase in any market. That's a phenomenal gain. That's phenomenal growth. And to have a title that says Metal Mania starts soon, I was like, it's not here already. I mean, that's some pretty good growth.
Yeah.
Um, but they did, I found it interesting as I read through the article. They get into, what the performance has been, and what kind of things that we may expect to see here moving forward. And I was like a little bit surprised. I know that most money advisors are not wealth advisors, money managers, etc. When it comes to their clients' portfolios, they're not. They don't. They tend to not be overly vested or involved in metals because, in all honesty, it's not something that they really deal in. It's they look at other vehicles. They always have. They've come out
Mhm.
with some gold options that they options or slash alternatives they can put people into. Mining shares or ETFs, etc.
Yeah.
But when you look at the number of you look at what gold prices have done, and the figure roughly in this article is that basically it's like less than or right around 1% of money managers. That's 1% of the money that these managers are managing. That's all that's in gold right now. And
Yeah.
my point being is like, if that's all that's here now, it wouldn't take much. Like if that number just went from 1 to 5, I mean, good Lord, what might we expect to see happen with gold prices? So what do you think is going to be the impetus or the trigger, Chris, that gets people more vested or more involved in gold? Will it be at the hands of their money manager, or is it something that you think they're going to have to make that decision on their own?
No, well, money managers may catch on. And I don't mean that to sound, condescending, but if a lot of their clients are talking to them about precious metals, then obviously more of them are going to jump on board. And I think it is easy to overlook the fact, you and I, we've been kind of entrenched in this market for a long time, and so it's a big part of our daily world. And I think sometimes we forget that the average person probably isn't even paying attention to gold. And this article talks about that, how Google searches about gold and silver, precious metals, are relatively flat over this year, even though we've seen that 30 plus percent rise, like you mentioned. And they point out in here only 2% of advisors have clients with 5 to 10% of their money in gold.
That's
So that
correct. Yeah.
leaves 98% that do not have much at all. Maybe just a small token amount, under 1%, like you had mentioned. So a lot of this growth is because of central banks buying. They also quote in here that central banks doubled their purchases in the month of July from the month prior. So I mean that's a big number when you're talking about large central bank purchases. And so I really think the next several years, probably the next 3 to 5 years, when this becomes more common and mainstream, that's when you're really going to see a pop in prices. So while to you and I, the growth has been pretty good, once the other 98% of the population figure out that gold is not this archaic relic, that there is a purpose for it, and that it will, protect some of their savings from inflation and some of the tangible benefits of having physical metal. I think the numbers that we're seeing now are just a small drop in the bucket, really. I mean, we should certainly see $4,000, $5,000, $6,000 in the next seven or several years, just from even a moderate increase in the average consumer being aware of precious metals. So I think we're certainly going to see it continue to climb. Doesn't mean there might be little pullbacks, during that window, and that's always a great opportunity to buy. But quite honestly, I'm telling people, if you're planning on holding for the next 3 to 5 years or longer, 10 years, 15 years, just start buying now while you can at these levels, and continue moving forward and dollar cost average into the market.
Right. Right. Well, and you mentioned something, and to even clarify it a little bit, you talked about how when the 98% of the others out there catch on and start, however many of those, begin to invest in gold, what might that do to the
Mm-hmm.
market? Well, understand that 98%. That's just those are people who have a wealth manager or a wealth
Right.
advisor. That doesn't
Yeah.
even include whatever else monies are sitting on the sidelines out there.
Yeah, you're
So
absolutely right.
it's the demand factor and where that would come from could be huge, could be
Hmm.
tremendous. And
Yeah.
I did find, I think we've talked about this before. I'm old, and I realize I'm getting old now because I was in the investment banking industry in the early '90s, and you'd always hear those stories or that example given about how you would have taxi cab drivers and barbers who would be giving you investment advice. And
Yeah.
as I started reading this article to show you how things have changed, it starts off. I've had at least a dozen Uber drivers pitch me on suspect investments. For a while, it seemed like every trip came with free and invariably horrible picks, and I was like, "Wow, what a change in times where it went from cab drivers to now Uber drivers." So,
Ubers. Yep.
yeah. All right. Well, thank you. And for those of you tuning in, thank you for doing so. If you haven't contacted our office already to receive some of our information or materials, it's complimentary. There's no charge for it if you want to learn more about gold. If you'd like to get the report that we have derived our title of this podcast, Secret War on Cash, you can do that as well. Contact us by phone at 1-800-289-2646, or you can visit us online at www.swissamerica.com, and one of our representatives will be happy to speak with you if you, like I say, if you do have any questions. And if you're not subscribed to this podcast already, please do so, as we look forward to bringing more information like this to you in the future. So thanks for tuning in and have a great rest of your day.
Thanks a lot. Take care.